Well, hello again, Maverick traders, and welcome out. This is Ankit from Maverick Currencies here, and this is a quick preview for the US and Canada's payrolls report that's due tomorrow on a Friday, August the 4th. So there's a lot to prepare for as we are going to this market moving event where we can actually expect a bigger move, especially if there is a surprise. So usually big moves happen in the markets when there is a surprise. And tomorrow we are heading into this Canada and US jobs report. And one of the things leading up to this report that we're noticing is that there is some sort of weakness that are coming into these numbers. And we have seen an uptick in the unemployment claims that we got this morning. We have following Joel's jobs report that we got earlier this week. So there's a moving components to it. So I think that's the last standing kind of wall here is a good jobs number, because if the numbers are actually weakening, then that would put a bit of a grim picture for the Fed to actually be as aggressive raising rates. So tomorrow we'll have to prepare. And again, if you take a look at the U.S. employment report, they're expecting a 250,000 jobs compared to what the previous was 372. So if this number comes in line with expectation, I think that's not going to create a big move. But let's just say if this number comes out about 100K or even less than that, now that would have a lot more impact on the market, especially on the bearish side, because this is where it will start to confirm that we are actually seeing recession, or the recessionary pressure that's causing everything to kind of decline. Same thing out of Canada. Like last month, we had lost unexpectedly. That was a 43,000 jobs that was lost. Now, going into this report, they're expecting a little bit better in the employment report, 14.2 thousand, but the unemployment rate, they're actually seeing an uptick over there as well. So I personally think that if this number come out weaker than expected, as we have seen that the companies are starting to lay off, and that's, again, will start to translate into these jobs numbers. If that comes out weaker, again, I think that would make the Canadian dollar go lower, because now that will put pressure on Bank of Canada to actually slow down on its rate hike. And same thing goes with the US. If the number comes out much weaker than expected, I think now that is going to put some pressure on the currency to actually go lower. So I think there's more downside pressure into these currencies than going into the upside pressure. But again, every time you trade a news event, you always trade it with some sort of an outlook. And a lot of times, when there's a surprise, one way or the other, you get a bigger move. So let's do a quick currency basket analysis and take a look at where the velocity is right now. And this is where I think it's kind of telling you the story going into the jobs reports tomorrow. Usually the sentiment plays a big role when you're going to an important event. And notice that the Canadian dollar is sitting at a -2 on a velocity score, and the US dollar has a -1 velocity score, meaning that both of these currencies are actually weakening going into that report. So this is, again, the velocity score for the past 24 hours. If I take a look at the trend for a lot of these currencies have kind of gone sideways for the most part. But I think we have to take a look at Canadian dollar and the US dollar and look at the velocity and see if there's a lot more further downside risk within those currencies. Remember, right now, we're actually seeing an opposite price action. Instead of seeing every currency go higher, now we are seeing the opposite, where even though the central bank raises rates, the currency still falls, because that comes with a cautionary outlook, and that is not a good news for further rate hikes. So tomorrow, as you go into these report, just realize there's 3 ways to trade a news event. Enter before. Let's just say if you have a bias that I think the Canadian dollar is going to weaken, then I can go build a position going into that event. If I don't want to be exposed, then I can enter on the news. And entering on the news, where you get initial price action and you look for a follow through. And then the second stage entry is where you let all that price action settle out first. You get this big move up and down, and then you let the thing settle out and see which way it actually breaks out. And sometimes, look for initial breakout, you pull back, and you look for a third. This second stage entry, which is where you're looking for confirmation to go higher. Of course, like with any strategy, there's drawbacks. So slippages happen when you are trying to place a stop beforehand. So making sure that instead of using a stop, it's better to use a stop limit order. So that creates a window. And if the price action moves out of that window, that means that it's not going to trigger you into that position. So just realize slippages is always an issue when it comes to these events. So that's something to watch out. Now, whipsawing is also a bit of a negative outcome to have, because it doesn't matter if you're on the right side or the wrong side. You get this initial move here and you get this big candlestick, doesn't go anywhere. But remember, now you got your positions in there, or you have your stops in there, and that will actually trigger those stops quicker, and it just doesn't go anywhere. So that's where you get chopped around with volatility. So there's always these pros and cons. You never know what you're gonna get, and that's why this randomness is difficult. If you are always trying to make the right decision, I think the best way to do is you stay consistent with your strategy, or if you have a strong bias. If I have a good risk to reward, then you can enter a position beforehand and go with it. But a lot of times, I go into these news events because I literally have no idea which way the price action is going to go. So let's do a quick trade setup analysis, and let's take a look at how things are developing, and then we can position ourselves in the right direction. So remember, first thing first, we need to make sure we're in the right side. We get the direction right. Once you get the direction right, now we can actually work on our entries. So let's talk about dollar. One of the things you look at dollar has been weakening in the past few, since the CPI report that we had just a few weeks ago. I mean, you can see that the dollar has actually started to move lower. One of the other things, if you take a look at the 50-day moving average, that's one of the things that we were discussing earlier this week, is if this 50-day moving average is going to give up. So notice that this week early, we did break below it, but we got a pretty good snapback right after it. And right now we're just hovering around this 50-day moving average. So I think at this point, the price action or the dollar is kind of neutral going into this. But again, I think in one way or the other, if it breaks this low or this high, then I think we can actually get a bit more traction in that move. But a lot of the movements on trend on a daily chart, you'll notice that a lot of things are stagnating right now, which means that it's not giving us a screaming buy or a screaming sell signal. Now, dollar, we looked at it. If we take a look at other currencies like Kiwi, sideways. We have the Aussie, which is kind of sideways. You have the Canadian dollar, which is now actually moving lower. And going to other currencies like pound, sideways. Now looking at euro. Euro actually is also sideways for the past a week or so. But it's actually hitting the upper end of the range. The Swiss franc, you can see this is sideways. So you have the Japanese yen, which again has been moving nicely. It has a wide range, but if you look at it overall, this is a range-bound price action. So you can see that a lot of things that are not really trending as strong or as weak, and this is where it's difficult to pick an outlook and kind of go with it, because you never know if the next day is going to be a pullback day. Because Swiss franc, let's use Swiss franc as a great example. We start off the week with a bit of a negative note, and then we actually had a nice little red candle here on August the 3rd, and here we are August the 4th. We did reverse that candle, and then here we are setting up for August 5th, and we have no idea if this is going to go higher or lower. So I think whenever you see this, you just have to kind of be in the middle and kind of pick the direction based on whatever price action is telling you, because continuity is really the key when you're looking for directional move. But when you get sideways move, it's hard to pick a continuity because things are just not really moving one way or the other. I mean, Kiwi is a great example. Now, we can see a lot of times Kiwi look good, and so a lot of times Kiwi look bad. But in the grand scheme of things, this thing's not moving anywhere. So if you're trying to find a continuity or a continuation patterns, a lot of times I get this question, I'm looking at a great setup, it's a high base or it's a low base, but it just reverses. Why is it reversing? I mean, go back to the currency basket, and then you can see what the currency basket is doing overall. So if I really seeing the Swiss franc do this, I have no desire to really play this directionally or whenever it's setting up for a nice basing or nice setup, because there's a good chance that it might reverse or might not have a follow through. Now, what we want this to have a follow through. If you're looking for directional trades, I mean, this is what we want to see. But when you have this, we have to really watch out and look at the price action and not be married too much overall in the direction, but maybe take a look at velocity and then kind of go with it. So as we go into tomorrow, I mean, the only thing that's looking decent to me here is the euro. I mean, you can see, surprisingly, euro is actually trying to reclaim this breakdown that we have seen on the basket. Notice that we got the breakdown, but we never got that big follow through. And here we are trying to reverse a little bit. So if you look at the velocity score, I mean, the Swiss franc and euro was the best today. As you can see that the euro and the Swiss franc is actually holding it much better outside of everything else. So this is where you get to pick the time frame. And I think it's better to take a look at it from a 15-minute to an hourly chart. Let's just say that right now. Let's just take a look at it from an hourly chart. You can see that Swiss franc is holding it really well. And so is the euro. Euro is actually looking a lot better than the Swiss franc, surprisingly. So I think this is where I would be interested in taking a look at euro. For the first time in a few weeks, I haven't really gone or liked the euro overall. But outside of that, if you're trying to pick a direction, you notice that some of the things that are not really strong as far as the direction goes. Aussie's pulling back. You have the Kiwi that's pulling back. And we actually have the CAD that's pulling back. So there's one thing that we can see clearly is that there's these growth currencies that are showing in a performance. So the question is, where's the money going then? Is the money going in dollar? Well, clearly not. Money's not going in dollar. And is the money going in the yen? Now, I can make a better case for the yen. I think yen has done a good job at this week pulling back. And at this point, you know, we got this little breakout. We got a pullback. I mean, this is standing at a good chance for making a run higher if the price action actually supports it. So the yen actually looks good on the upside, and along with the euro as well. I mean, so let's just take a look at currency pairs like euro dollar. Notice that euro dollar is trying to get to its resistance at about 102.73, and notice that if it breaks this above, we can actually see a little bit more upside. So I think this whole thing will depend on what the dollar is going to do. So remember, every time we take a look at news event, we have to prepare for both case scenario. What if it's strong and what if it's weak? So we can actually make a case that if the dollar is weak, I like it against the euro, but that would be potentially above this breakout. So not at this point, above this 102.75 area. If it breaks above that, I would be interested in taking a look at it. But outside of that, dollar yen, that's another pair that I would really like here on a further breakdown. I mean, look at the daily chart. We did break lower, had a bear rally. At this point, it looks like it wants to roll over. So playing the relative strength of weakness, the dollar yen also goes top on the list here for dollar weakness. And we can also take a look at dollar Swiss franc, which again, all kind of setting up very nicely onto the downside. So now the opposite side, what if the dollar is stronger? Like, what would you want to pick if the dollar is stronger? I think right now we can take a look at Aussie dollar. I mean, this is every rally's kind of not fizzling out a little bit. It's not showing strength. RBA raises rate early this week, but you can see that the initial price action was onto the downside, and it actually has made a nice little recovery since then. But I mean, this is where the rate announcement was announced, the rate hike was announced, and we are actually still sitting quite a little below. So Aussie dollar still looks good if the dollar is strong. And we can also take a look at other currency pairs. Let's see how the pound dollar is doing. Notice that pound had a big movement one way or the other. They did raise rates today, but then they came with a cautionary outlook, which again is not a good sign if you're trying to gauge how strong the economy is. So if the dollar is strong, I think the Aussie dollar or even Kiwi dollar or lastly dollar CAD, this is one of these currency pair that hasn't really done much in the past few weeks. You can see where, since July 19 to now, this price hasn't really gone anywhere. So I think if this Canadian dollar comes out weaker, and if the dollar will do better, I think we can reclaim this area and then kind of retest at 130. So it's pretty clear to me what to do if the dollar is weak and what to do if the dollar is strong. So those are the setups that we'll be paying close attention to. And again, we'll do a quick analysis tomorrow morning as well, see what's performing well, what's underperforming. And then based on that, we can decide, okay, what's the kind of price action we're getting with the dollar and which way we want to be. Remember, it's just not about the dollar. We want to see how the equity markets react to it. Because if the markets actually are underperforming, then that will weigh down on some of these growth currencies. If the markets are doing well, that would actually help the equity markets as well. So that's what we are looking at. And again, tomorrow morning, we'll do a quick analysis once again, and we'll take a look at how things are moving and then pick a direction. So overall, if you're using orders, if you're entering position on the news, make sure you do stop limit. I mean, that's the only time I like to recommend using stop limit orders, because this is where you create a window. And if the price stays within that window and triggers you in, that's great. And if it goes above it and it totally have a slippage, then that doesn't get you in, because that's usually what happens if you have a buy stop order and the price action totally have a big slippage. It only is going to get you in where the price opens up after. So the gap, it doesn't protect you against the gap. The stop limit orders will actually give you a little bit more ease of mind if there is a big movement off of it. So US dollar, I'm looking at this as a neutral currency, but again, after deciding what this dollar is going to do, I think we'll have a better idea once that job support's out of the way, and that also will set up nicely for next week as well. So as far as the relative strength, I mean, as much as you don't want to buy the euro, I think right now euro and Swiss franc are looking the strongest. So we have to just prepare or play the markets in front of us. And then secondly, the CAD is actually looking weakest. So usually, when you have the momentum that's weaker, even though we get an initial pop, remember it usually catches up with that trend unless this report is totally the other way and the market has to reprice. If it comes in line with expectation, I expect the CAD to stay weak, and perhaps even dollar to kind of move lower as well, and that will actually help the euro, even the Swiss franc, to go higher. So that's the outlook. Again, we'll be meeting tomorrow live for this, so make sure you register for the class, and we'll see you guys in the morning. Till then, take care and happy trading.